Good afternoon. Good afternoon. It's Monday, the 11th of March. My name is Thailand Telcos. I'm the head of research for MIBG Securities in Singapore. And welcome to our latest edition of Market Mondays. We have a lot to talk about. All eyes are on Tuesday's US inflation numbers. That'll give us a path in terms of when interest rates will start to get cut. We also had China's National People's Congress last week. Not a lot of confidence coming through to the markets, but let's talk about the implications of that as well. So in today's show, we'll take a very quick look at China's annual two sessions meeting. We'll follow that up with Dan Ives, who's the number one US tech analyst, who will be talking to us about the Magnificent Seven as well as AI. It's probably right on time given the fact that NVIDIA dropped about 5% last Friday. Then we have our Thai analyst Wasu, who's going to talk about why he's so bullish on the Thai telco sector. And then finally, we have Jia Lin, who's going to come online to talk about one of our high conviction opportunity plus stocks, LHN. So as usual, let's start with the market movers. I'm sure you've downloaded our newsletters already. But we do see some insider selling spooking the tech names in the US. That's actually brought down the Nasdaq by about 1.2% last week. On the other hand, we see the Nikkei advancing 0.2%, partly as we start to see some of the deflationary vortexes coming off in Japan. We also saw there was some hope from the market from China's People's Congress, and that helped push up the HSI by about 0.8% and the Shanghai Composite by about 0.6%. And some of that washing through to Southeast Asia as well. KLCI up about 0.3% and the STI up about 0.4%. Now, let's start with China. China's annual People's Congress happened last week. A lot of the emphasis was clearly on boosting self-reliance, especially on advanced technologies. The priority is to enhance supply chains as well as the competitiveness with government support creating Chinese brands with a global reach. Think TikTok, but for a lot of other manufacturing sector and industrial sector names as well. Specific areas of focus will be on areas like intelligent new energy vehicles, hydrogen power, new materials, innovative drugs, commercial space flight, drones, as well as biomanufacturing. Now, the real estate sector, which has been suffering the most, barely got a mention. I think the lack of any decisive measures to revitalize this sector may be signaling that the government is willing to stay the course and allow activity in this sector to reach a new equilibrium. So there might be more pain to come there. The government is sticking to their 5% GDP forecast for this year, which will require a fairly strong boost in terms of net exports as well as new investments going into China as well. So we need to wait and see how that takes place. Our Maybank's own forecast for Chinese growth this year is 4.4%, so tad below where the government is forecasting at this stage. Now, as you know, Redbush Securities is Maybank's brokerage partner in the US, and one of their analysts, Dan Ives, is one of the top tech sector analysts in the US. I caught up with him earlier last week to discuss how he sees the current trends in terms of AI as well as the Magnificent Seven. So let's listen to that interview right now. Hi, my name is Thilan Wickramasinghe. I'm the head of research for Maybank Securities in Singapore, and welcome to a special edition of Market Mondays. With me, we have a very special guest, Dan Ives, who is the managing director and senior equity analyst covering the technology sector with Redbush Securities, who's Maybank's brokerage partner in the US. Dan has been an analyst for over 2 decades, and he's one of the most highly sought after tech experts around the world. He has appeared in multiple media, including CNBC, BBC, The Today Show, Good Morning America, and so many other channels. A major area that he researches on is on EVs as well as disruptive technologies for the next decade. Dan, welcome to the show.
Thank you.
Look, you've called AI the 1995 moment for the software ecosystem as well as the tech sector in general. What do you mean by that?
So, as someone that covered tech in the late 90s, 99, 2000 obviously was the bubble and burst. We believe this is a 1995 moment, not a 1999. Star of the internet. I think this is an AI revolution. We do not believe this is a bubble. And that's a big thing that we talk about with investors around the world. This is the start of a generational, call it fourth industrial revolution playing out, not a hype 99, 2000 period.
Okay, so let's unpack that. I mean, you know, we've been calling out for this fourth industrial revolution now for a few years now. I mean, even pre-COVID, there was a lot of calls for the fourth industrial revolution. What makes you confident that it is now than any of these other times before?
Like, it all starts with the godfather of AI, Jensen, NVIDIA, and you combine that with what Nadella's done with Microsoft and Copilot. That has really been the start of the revolution, because now companies, they're able to tap into 70, 80% of data they were never able to tap into before. And the use cases that are now going to start, and I don't mean on the consumer side, I mean on the enterprise, it's going to change the world. Vertically, I think, across financials, insurance, government, healthcare, and hospitals. So the reason we believe it's a revolution is because of the spending. I mean, for all of our checks show, for every $100 customers have spent on cloud, there could be an incremental 35 to 40 of AI spend. If that continues, this is a party in Vegas that's lasting until 4 a.m. Right now, it's 10 p.m.
So there's a lot more partying to do. And I actually want to kind of talk about that. You know, you've written about this multiplier effect, dollar per GPU and so on. If you can help us unpack that. What does that really mean? And when will we start to see this multiplier effect in the real economy and in the rest of the tech ecosystem?
Well, that's why it's not just about the godfather, Jensen, and Microsoft. For every dollar spent on a GPU, the multiplier across software and services and the IT infrastructure, we believe is $10 to $12. So our whole point is that this tidal wave of spend is now coming to the shores of tech. And when you start to look at, the skeptics, they'll be like, it's a bubble. It's not a bubble. I mean, I could tell you, we've talked to 150 customers the last 6 weeks. The spending is unlike anything we've seen. And that's why our view, you can't just sit there and look at these names on a valuation with your 30 spreadsheets, put it on a PE for. You would have missed out on every transformational tech name in the last 20 years, from Facebook to Tesla, Microsoft, Amazon, the list goes on. This revolution's real, but that's why it's a 95 moment and not a 99 moment.
Right. So the revolution is real and time to be bold is now. But what about China? You've got the National People's Congress, which just recently happened, really didn't produce any big bazookas. We've got the chip war with the US, getting more and more intense. Aren't you worried that this may slow down the whole pace of AI, particularly with disruptions to supply chain?
Now, the reality is, for the first time in probably 30 years, China is the little kids table, US is the adult table when it comes to who's leading this revolution. It's really been the opposite for decades, right? It's because of NVIDIA, because of Microsoft, because of where the technology is, Mag 7. China, clearly, no secret, it's been an epic disaster in terms of that market. But I do believe the AI technology that's going to come out from Baidu, from Tencent, from some of the big tech players, it's going to spawn almost called like a decoupled AI revolution within China and broader Asia. But despite the geopolitical, it's been a tug of war, but a tight wire act. You look at NVIDIA, they've had those numbers despite a soft China number. Right. So my point is, this is what's happening with geopolitical tensions. If we start to see tensions even take a little step down, I mean, it could be really parabolic.
Right. So I actually want to come back to, Jensen Huang. You have mentioned him as the godfather of AI. He's the CEO of NVIDIA. The stock's already up 80% year to date. Is this already priced to perfection, or should we be worried?
We're only halfway through where this could go, because they're the only game in town. And what Jensen has done is really created a situation where anyone that wants to do generative AI, that red phone has to go to NVIDIA, has to go to Microsoft. Now, I'm not saying AMD, Lisa Su, Intel, others they're clearly going to benefit. Right. But in terms of when you start to look out at NVIDIA over the next 3-4 years where numbers could go, I could argue in some ways the stock's cheap or not expensive. So I think we're going to continue to see across tech, it's our view, this new tech bull market has begun. And we believe it lasts through 2025.
Got it. Actually, so I want to come back to Microsoft in a bit, but I do want to talk about some of the second derivative names to NVIDIA. So who should we think about when we think about some of the second derivative beneficiaries?
Great question, because what we're spending so much of our time on is who's the second, third, and fourth derivative of the AI revolution. Mm-hmm. I believe software, front and center. You could say 23 is about chips, NVIDIA, TSMC, others. It's really going to be software. And I think it starts with Palantir. We call them the Messi of AI. Use cases front and center. MongoDB as another name that we love. And I think a lot of these install base, Salesforce, ServiceNow, Workday, you're going to have a renaissance of growth. Right. And then even when you look at third, fourth derivative, cybersecurity, we think it's a golden age for cybersecurity. You're now, all those workloads that move to the cloud and get accelerated, you got to protect them. So when I look at names like CrowdStrike, Zscaler, or Palo Alto, despite a soft quarter that we saw over the last few weeks, CyberArk and others, and that's really our call, is that the software layer, front and center in terms of this revolution. But to be clear, many times I meet investors around the world like, it's hype, it's bubble, but the monetization's real. That's the difference.
Got it. So let's stay with software and let's talk about Microsoft. I mean, it's been a clear superstar in this whole AI revolution, with especially with the whole sort of partnership with ChatGPT as well. How do you see the prospects for this company now?
It plays chess. Others play checkers. Right. And if you look at what he's been able to do from Azure, from OpenAI, even I almost call it a coup d'etat that almost tried to happen on the board. Nadella handled that like a World Series poker player playing against a 5-year-old. And now it's about monetization. Copilot, look, we believe 60 to 70% of Microsoft customers are going to move to Copilot. 4 months ago, 20%. So it's like when you start to put numbers like that through, you could be talking an incremental 25, 30 billion of revenue per year for Microsoft, which we believe a year from now, it's a $4 trillion market cap.
Yeah. So let's talk about another Hall of Famer who's kind of not a Hall of Famer, and that's Alphabet. They've been in hot water recently with the whole AI platform that they have, Gemini, with Sergey Brin himself coming out and saying Google definitely messed up. The stock's underperforming, it's down about 5% year to date. How should investors think about this company? Can they catch up?
Black eye moments, no doubt. I mean, they were late out of the gate, had PR nightmares in terms of the launch with Bard, and the Gemini, just another horror show in terms of what we saw. But the most AI engineers in the world are at Google. Right. Our point is, I'm not saying this is roses and champagne. But their opportunity to monetize on GCP, on the consumer side, on search, we believe could ultimately add $30 to $40 per share. So I think this is one. Look, Apple, Tesla, because of the China situation, real headwinds, right? When I look at Alphabet, I think some of this sell-off has been way overdone.
Okay, let's actually talk about Apple. They've canceled their Apple Car project. They're saying they want to spend more on Gen AI. We've also seen iPhone sales in China down about 24%. So in the early part of this year, where to from here for Apple?
Clearly, look, it's not been a Cinderella story for Apple. And especially in its core market, China, 20% iPhones, geopolitical, Huawei, it's kind of a perfect storm. But in 15 years, you know how many times we've been through white knuckle periods with Apple? My view is it's about the install base. 2.2 billion reasons to be bullish. Services is a key part of the re-rating. We think that's worth 1.5 to 1.6 trillion. And now AI will be coming to the ecosystem in Cupertino. And I think that initially gets introduced in June WWDC. Then you have AI functionality into iPhone 16. Right now, the New York City cab drivers bearish on Apple. I believe this is more of a golden buying opportunity. You don't trade Apple, you own it.
Let me finish off with my final question, and that's on Tesla. The stock's down big time. Legal issues for Elon Musk keeps mounting, and we are seeing a lot more competition coming from the Chinese EVs, as well as even there's some pretty nice cars coming from the German guys as well. With all this competition and all these legal issues, how do you think the stock's going to measure up?
The reality is the biggest overhang's been China. Call it 40-45% of vehicles. Price war, Game of Thrones has taken place in the country. Margins has gotten hit. Clearly some soft data coming out of China. Look, I feel like this is it's a transition to the next growth phase of Tesla. If you own Tesla here, and we remain firmly bullish, you own it because of AI, FSD, autonomous, the opportunity in a survivor. They, along with BYD, NIO, and others, will really be the ones that are going to benefit. But no doubt, we're going through a hand-holding period. When I look at the stock, it's baking in a lot of bad news. I think they get through this. I think margins start to trough. And I think, yet again, this starts a march back to $1 trillion market cap over the next 12 to 18 months, despite all the bears coming out of hibernation mode. For good reason the last few months.
Okay, so there's a lot of information there. So do wait for the playback, and you'll get to take some notes as well. Next, we've got Vasu, who's on the line, and he's going to talk about Thai Telcos. Vasu, welcome to the show. You put out a very strong report reiterating your positive position on Thai Telcos. What's driving this bullishness?
Hi, good morning, Thailand. So we have been positive on Thai telcos for quite some time. The latest report that I put out last week, we reiterate our positive view on the sector. So to give you and the viewers some perspective, Thailand is the only duopoly market in ASEAN when we look at the mobile industry. And we believe that duopolies deserve premium valuation over the regional peers. The number of mobile operators in Thailand reduced from 3 to 2 last year in March, when True, the number 2 operator, merged with DTAC, the number 3 operator. And after 4 years of core profit declines due to weak purchasing power on the consumer end and COVID crisis and fierce competition, we finally expect the sector to turn around to 64% core profit growth this year. So it's a turnaround story. It's a story of market consolidation, and profit growth is supported by easing competition and cost cutting after the merger has ended. Yeah, and in the report, you will see that despite the strong outlook, the Thai telcos are still trading at the multiple discounts to the regional peers. That's why we are bullish on the sector.
Got it. So 64% earnings growth. That's a very, very chunky number. That's great to see. Vasu, you named ADVANC as your top pick. Why is that?
Yes. So originally, my top pick had been True Corporation since late last year, but last week I switched my top pick from True to ADVANC. This is because ADVANC has been quite laggard in terms of the share price performance. So the switch from True to ADVANC is valuation based. So to give you some perspective, True has risen by 44% year to date, but ADVANC has dropped slightly year to date. So in terms of our thesis for ADVANC, ADVANC is supposed to have 11% profit growth this year, and the dividend yield is almost 5%. And in terms of the valuation at the time of the report publication, the PE ratio for this year at ADVANC is 19 times. This is 15% lower than the ASEAN telco peers and 9% lower than its pre-merger level from 2020 to 2022. So despite the market consolidation, ADVANC is trading at a discount to its own pre-merger level, which is quite strange for me. So I think there's some room for re-rating for ADVANC.
Right. So cheap discount and against its own history as well as its peers as well. Vasu, so what about True? Is this still a buy?
Yes. Actually, we like both. Like I mentioned to you, the switch to ADVANC is just a valuation thesis. But for True, we are still quite positive. We have a buy call on True with a target price of 8.3 baht per share, which is around 15% higher than the market price. And True, we expect the company to have a Q-on-Q improvement on the earnings side. It's still generating some losses. In the fourth quarter, the call loss was around 1 billion. In the first quarter, we expect the call loss to narrow down to 300 million Thai baht. And then in the second quarter of this year, the profit should be positive, and then positive from the second quarter onwards. So the Q-on-Q momentum is strong, and there's a lot of synergy to be made at True. So like I mentioned earlier, True and DTAC merged in March last year, and they kicked off the cost-cutting process in the second half of last year. So they are aiming to cut multiple OPEX items by 30%. For example, the staff cost will have to go down by 30%. The shop rent, the office rent, and the tower rent will have to go down by around the same magnitude. So that's why we expect True to turn around from 6.9 billion baht of loss last year to 3.7 billion baht of profit this year. So yes, we are still positive on True. It's just that the share price has performed so well, causing us to switch to ADVANC as a top pick.
Got it. Thanks, Vasu. That's very clear. Thanks for joining us today.
Thank you, Thilan.
Now we've got Jia Lin, and she's on the line to talk about LHN, one of our high conviction Opportunity Plus stocks. Remember, Maybank has Opportunity Plus and Discovery Plus stocks. Do watch out for those research reports because they highlight when we have very high conviction behind an idea. Jia Lin, before we talk about your buy call, can you give us a quick background of what LHN does?
Yeah, sure, Dylan. So LHN is a homegrown co-living operator with around 30% market share. So if we break it down by top line, 30% of its revenue is coming from its local co-living brand Collywood. Leasing of industrial and commercial space contributes another 30%, and facility management contributes another 30%. It also has several other businesses such as car park management and renewable energy service. So how it stands out from other property and property management companies is that it has really picked up its momentum in co-living space since 2019 and has expanded aggressively since then. It has 2,153 keys as of first quarter this year, and LHN has set really ambitious growth target of 800 kids per year.
Got it. Very quickly, Jelin, why are you reiterating a buy call? What's so special right now?
Yeah, so LHN has just released its first quarter business update, and our key takeaways are stable set of metrics for its co-living business. Occupancy was above 90% as of December last year, and rental rates are holding up nicely. Now, that is a very reassuring sign, especially given the slowdown in a wider rental residential market. How LHN stands out is its resemblance to service apartments in terms of income stability. And on top of that, coming second quarter this financial year ending in March, we expect to see some slight upside from co-living hotel segment, led by a string of events and concerts happening since January. And we also see some contract wins for almost all the other segments. LHN added 24 contracts to its facility management in first quarter, 7 solar energy projects in Singapore, and 2 car park projects in Hong Kong. And on the strategy front, we are very happy to see some expansion plans for Kollywood. LHN will bring Kollywood brand to Jakarta this year. It will also rebrand its old overseas assets, 85 Soho, to Kollywood, and this will mainly take place in Cambodia and China. Back at home, the 2 contract wins to house MOH nursing professionals will put at least 350 kids to its pipeline. So overall, we are reiterating buy on near-term stability with upside plus medium-term growth prospects.
Got it. Thanks, Jelin. Thanks for dialing in. Now, let's quickly move on to upcoming events. Quite a few events coming up over the next week or so. Obviously, the primary announcements would be the US inflation numbers coming out tomorrow, but also Nordex numbers for Singapore out on the 18th of March, and IP numbers coming out on the 26th of March. In terms of webinars, we have one coming up on the 19th of March with United Hampshire US REIT. I think quite topical given where US commercial property is. So do sign up and dial in for that. With that, we are out of time for today. So thank you so much for joining us, and have a profitable trading week, and see you next week.